Hi everyone, Jeff Yastine here. Make sure to hit our YouTube subscribe button and to follow me on Twitter and on Facebook. It's one of the most confounding aspects of the stock market. Like Pavlov's dogs, or maybe my dog Lexi back there, we all know we should buy a stock when the news is good. Maybe profits are up or the company has an exciting new product. The part that throws off many investors, especially when you're new to investing, is why a stock would go up on bad news. And I'm starting to see that in recent weeks in some of the worst hit sectors of the stock market. For instance, with airline stocks. Since May, many of the major carriers' shares are up around 30 or 40%. Now, the gain looks like nothing, of course, compared to where these stocks were trading before the pandemic. And if we do a little technical analysis on the charts of these companies, the one thing I would still like to see from them is that these stocks make new higher highs, and we've not seen that yet in any of the airline charts that I follow, although a few are getting close. So it's possible the share prices continue to flatline or slowly fade lower. I mean, all we really have when we invest in the stock market is probabilities, the odds, a reasoned guess as to why a stock is going to go up, down, or sideways. And right now, the odds would say that airlines are a bad bet. COVID-19 is still a serious problem. Most people still don't want to fly if they have a choice. The economy is only slowly recovering from the worst of the pandemic. So why would an airline stock start to go up against that kind of backdrop of negative news? Well, one reason would be that the worst of all that news is already priced in. And you could argue that's why a stock like Delta is already at $30 instead, of course, at $60 like it was at the start of the year. The other reason, it's all about capacity and costs. Now, this is something that escapes most investors. For instance, since the pandemic hit, the airlines have mothballed hundreds of planes in so-called desert boneyards where the air is dry and there's little worry about corrosion from rain and humidity. So the planes can sit there stored cheaply in the open air for a long time. So as people slowly become more comfortable with air travel again, what happens? Well, we buy more tickets, but there are not as many planes available as before the pandemic. So when there's lots of demand and not enough supply, that is a supply of planes and empty seats, what happens? Well, the price of your ticket goes up and the airline gets to make a little more profit than might otherwise be expected. Now, something else happens as well. Airlines, as many of you know, have furloughed thousands of workers, and that's bad for them if you're part of that group. But it's good, unfortunately or not, for the airline and its shareholders. Labor costs are a major part of every airline's operating budget, so the airline gets to keep more of that money, which helps its profits as well. Now, will some of those people be hired back as air travel recovers? Sure. But as we all know, it might be years before they would all be theoretically rehired. And in the meantime, like all companies, unfortunately, the airline then figures out how to safely accomplish the same tasks with fewer workers. Now, my point is, smart traders and Wall Street analysts realize this as well. So they begin to buy or quietly recommend the stock to clients with an appetite for some risk. And since no one else is interested in the industry at a time like this, they can buy lots of shares on the cheap. And it doesn't matter to them whether the stock goes up next week, next month, or next quarter, or if it goes down further. All they know is that sooner or later, more people will want to fly. And the math says that when they do, it will mean the airline reports larger than expected profits relative to the stock price. So that's why airline stocks, or any stock for that matter, can go up on bad news. Now for the big question, what about buying an airline stock? And is there enough risk versus reward to make it worthwhile? Well, executives at some airlines are certainly doing that. Several board members and the president of Allegiant Travel, ALGT, that's an airline with a large following among leisure travelers, have been large buyers of that stock. At Delta Airlines, DAL, several board members and executives have also bought shares, even as big shareholders like Berkshire Hathaway have sold. And of course, you've seen plenty of headlines on that. Now, I've not seen insider buying yet at Southwest Airlines. The symbol is LUV, which is one of the premier flyers. But the company is trading, the stock is trading at what could be considered a relative bargain. A simple measure of that is called a price to book ratio. And you can look up the specifics on how that's calculated elsewhere. But basically it's telling us or comparing the value of the stock versus the book price of the company. In other words, if we had a garage sale and we sold all of Southwest planes, its real estate, and added in the cash it has in the bank, and then subtract its debts and other obligations, what it owes, that's its book value. And as you can see on this chart, right now, Southwest stock, currently trading at around $38 a share, is priced at twice its $18 a share book value. And only during the financial crisis 13 years ago has Southwest Airlines stock traded this cheaply on a price to book basis. So this chart is showing us that if investors change their opinions about airline stocks only a little bit, let's say they decide it's worth paying up to 3 times Southwest Airlines book value, then we're talking about a stock rising to $54 a share, which is 50% above where it is right now. But does that mean that you should buy an airline stock? So this is a look at Delta Airline shares, and like pretty much all the airline stocks right now, this one made a high in early June, and since then it's moved sideways, but it has not made a new higher high, at least not yet. Although if you look at it, it appears like it wants to move this way, but we will see how that goes. That's really a 50-50 shot depending on, as I was mentioning, views of the economy, etc. If we look at perhaps United Airlines, it's a similar sort of thing. This is United. I'm just going to take away the earnings chart here for a second. But here's United Airlines stock, and likewise made a high in early June, and since then moving sideways. And if we look at American Airlines, it's very much the same sort of thing. Again, a high in early June, and since then it has moved sideways. Now, they are not, generally speaking, buy and hold stocks, in my opinion. You should approach speculating in them with care. I mean, basically, don't bet more than you can afford to lose. With the exception of Southwest, most of the major carriers have declared bankruptcy at one time or another in the past 20 or 30 years. They have lots of competition, lots of regulation, and high fixed costs. On the other hand, Southwest shares, for example, rose 400% in the early 1990s, another 400% in the late 1990s, and 700% in the 2010s. Other airline stocks have gone in similar huge runs, followed or punctuated, unfortunately, by occasional bankruptcy proceedings. So that's an example of the potential rewards and the potential risks that come with speculating in airline shares. But if investors decide to rotate out of technology stocks soon, yet believe that the economy's strength will slowly broaden as COVID-19 worries fade, well, airline stocks could begin to strengthen from here. So something to keep on your radar. If you like what I'm talking about, again, make sure to subscribe to us on our YouTube channel and follow me on social media. I'm Jeff Yasteen.